Welcome to Dr. Vijay's lectures. Dear viewers, we are proceeding to a new series of lectures, Financial Statement Analysis. So far, the lectures were on financial accounting. Analysis is the third stage in financial accounting process. Still, it requires a different approach, more short, precise, and scheduled. Hope you will appreciate the change. Our mission is sharing knowledge for free, so please don't forget to subscribe and share maximum. Please read the slide very carefully, giving time for that. Hope you have read it. Let us go through it again together. Balance sheet is position statement. Why? So the discussion is on why balance sheet is called as position statement. Balance sheet shows how much of funds is raised from each source, whether long term or short term, and how much of it is invested in each asset, whether fixed or floating, as on the closing of accounting period. It is a statement showing the position of sources and application of funds, both long term and short term, as on the specific moment of closing. So it is financial position statement. Let us go through the details. From accounting point of view, balance sheet shows the balances standing in each real account, personal account on closing the books of the firm for a period, which should be brought down to the books of the subsequent period. So it is sheet showing the balance of ledger accounts as on closing. From the financial point of view, there is a more deep significance. Balance sheet shows the book values of all the assets and properties as on closing time, and liabilities and capital as on that moment. The asset side shows how much of total funds is invested in the firm in each asset, whether fixed or floating, as on the closing time. How much on land buildings, on property, how much on stock in trade, how much in bank account, etc., etc. The liability side shows how much of total funds invested has come from each source, how much is the contribution of owner, how much is profit plowed back, how much is long term or short term borrowing, and how much is supplier's credit, etc. After the next transaction, the position will change, and before the last transaction, the position was different. So, balance sheet is the statement showing sources and use of funds on the occasion of closing the accounts. Statement of financial position or position statement. Thank you.